Good afternoon, everyone. It's great to be back here in person. My name is Kevin White, and I'm here with Amadeus to talk about greater protection for travel agents and travel suppliers through payments technology. As we're all fully aware, we are living in a pandemic, and it's safe to say that COVID-19 has fundamentally changed the travel industry. As the travel industry continues to face a volatile landscape, 4 new priorities now exist. The first one being virus hygiene and public safety. There are varying geographical and governmental containment measures creating volatile booking conditions for consumers. Secondly, consumer needs. Now consumers are demanding booking confidence and are looking for flexibility when they're making their bookings today. Profitability and payment protection. Capturing maximum future bookings is essential, underpinned by payment and booking protection to face what the future holds. And lastly, collaboration. Now more than ever, it's essential that travel buyers and suppliers work together even closer to ensure maximum revenue is captured. With all of these in mind, in the current volatile travel landscape, there is a critical need to address outdated processes that can't keep up with the pace of change. With existing B2B payments processes, there are several pain points that need to be addressed and have been exacerbated by the pandemic and is holding back growth in the travel industry. If we look at the first one, it's lack of protection and risk of non-payment, poor reconciliation, lack of cash flow visibility and liquidity, high admin burden and unable to support the mass chargebacks that happened during the pandemic, long settlement periods, and unpredictable economics. If we look at the payment flows today through indirect channels, when making a booking, there are 2 main payment flows. In each of these flows, the merchant of record is the key differentiator. The merchant of record is the entity authorized and held liable for the collection, administration, and the processing of the payment. If we look at payment flow 1, where the customer card is passed through, we call this the agency model. The customer makes a booking through the travel agency who does not accept the payment, rather they facilitate the transaction and passes the customer's card details on. The supplier of the service, such as the airline, then accepts the customer payment and becomes the merchant of record for the transaction. If we then look at the second payment flow, this is where we talk about the merchant model. So this is where the customer makes a booking with the travel agency. The travel agency then charges the customer's payment method, and then they arrange a secondary payment towards the travel supplier. So whether it be an airline or a hotel, there's a secondary payment that happens. This merchant model in the payment flow 2 is one of the ones that's becoming more prevalent in the payment industry. So what is driving the growth in the merchant model? There are 4 key areas to understand here. If we start with the customer experience, customers want to be able to use their preferred payment method when they're booking with a travel agency. And traditionally, when payment details are passed through to travel suppliers, they only accept card payments or cash transfers, meaning that installment propositions or other payment methods like local schemes aren't widely accepted by travel suppliers. Customers also expect that if they're booking travel with an intermediary, that their payment details aren't passed through. In recent years, there's been many data breaches where consumer cards have been exposed to fraud, which ends up being with a poor customer experience. If then we look at fraud and risk control, travel is especially susceptible to fraud because of the value of items sold, the online anonymity, rapid consumption, barriers to recovery, and the sheer amount of diversity of supplier and distributor relationships. Travel agencies can minimize the fraud when they take hold of the payment process. In leveraging their own capabilities, they can bear the cost and effort of developing their own fraud solutions. This is only possible under a merchant model and when they take full payment control and being the merchant of record. Regulation and compliance. Complexity of regulation and compliance in travel payments is amplified by the global nature of travel and the diversity of payment options available between consumers and intermediaries. Travel intermediaries can reduce the impacts across the value chain because they can and do stop the payment details being passed along the value chain. And then if we look at industry change and competition, it's estimated that 30% of travel agency bookings are packaged travel, such as flight and hotel. This level of packaging necessitates the use of the merchant model to avoid customers seeing multiple charges against their payment card. Overall, industry change and competition is driving travel agencies to reconsider their business models and risks following cuts in commissions, introductions of new fees, and huge losses due to airline bankruptcies. Considering these drivers, B2B payments process must now lay firm foundations enabling stabilization, recovery, and growth. Virtual cards provide the answer and are the leading method to facilitate effective and protected B2B payments, which help to create stronger partnerships to maximize sales and adapt to local market preferences, ensuring greater protection, security, and trust in an increasingly global market, and enabling flexibility and seamless cross-border transactions, which all have a positive impact on the customer experience. So what are virtual cards? If we take a look at what a virtual card is, it's a random digitally generated temporary card number. It has a unique number used for each booking and payment transaction. It works by much the same way as a regular credit or debit card, without the plastic. They're accepted anywhere that traditional payment cards are accepted. The card details simply exist as digital information to facilitate a single-use transaction, and they can only be used to the reservation to which they're assigned and set to expire after a specific amount of time or level of expenditure. And the virtual cards are supported by existing payment technologies, which means that acquirers, for example, don't need to do anything, and merchants generally don't need to do anything to accept virtual card payments. You may have also heard virtual cards called VCNs, VCCs, or VANs. These are all the same way of calling virtual cards. So there's a few other examples on the screen there now. So what are the benefits? Well, virtual cards significantly benefit B2B payments processes, and they will play a crucial role in the future growth and drive future resilience in the travel industry. The specific benefits are automatic reconciliation, reduced administrative burden, cash flow visibility, short settlement periods, providing a payment guarantee, and last but no means least, chargeback protection. Mastercard has been pioneering virtual card technology for a number of years now and providing this payment technology to key industry players like Amadeus. Our specific virtual card product, the Mastercard Wholesale travel program, has evolved in the past 12 months to support travel agencies and the entire travel ecosystem. We now have a flexible set of pricing tiers, which enables travel agencies to negotiate with suppliers and develop sales strategies, resulting in stronger partnerships. Through this, we've seen more adoption of virtual cards and virtual card technology by travel agencies and greater virtual card acceptance throughout the travel industry. Thank you all very much for your valuable time, and I'll now hand over to Nick, Head of Travel Payments Products from Amadeus.
Taking notes. Thank you, Kevin. Is the mic okay? Great. So thank you very much to Mastercard for inviting Amadeus along today. So today we're going to talk about accelerating a couple of areas. The first area, I'm going to present some findings to a survey we did at the beginning of the year, just into payment in general in the travel kind of industry and how COVID was affecting those. And then I'll give you a very brief overview of kind of Amadeus and what Amadeus Payments does. So as I said, this is a survey from early 2021. You can get to this from the internet. If you just type in accelerating the virtual road to recovery Amadeus, that'll get you to a link, or the link is there if you can remember it, which I expect not many people will. But it's useful just register and download the report, and you'll get a lot more detail on what I'm going to describe to you today. So I'll go through some key findings that we've pulled out of the report. So key finding one, probably no surprise, but profitability for travel agents is obviously a kind of key driver at the moment. And surprisingly, though, not just from a transactional perspective, but also from a kind of reconciliation from a manual processes perspective. So a lot of travel agents looking to automate their booking process and their payment processes and make sure that they can save on costs. So that's kind of key finding number one. Key finding number two. So there's a widespread kind of recognition that virtual cards can benefit the travel ecosystem. So we see all sides of the value chain starting to use virtual cards. Interestingly, airlines are also looking to receive virtual cards and use virtual cards themselves. And definitely in COVID, it's meant that they're able to receive their funds a lot quicker than before. So that's key finding number two. Key finding number three. So there were certain misconceptions in the market space about virtual cards. And so I'll go through those misconceptions. I've been asked by my marketing team to just call out these are misconceptions. So declines for virtual cards are higher with traditional cards. We've seen, as we're a GDS and we have access to a lot of data, we've seen that actually 98% of all virtual cards presented are accepted by the merchant. So virtual cards are definitely something you should look to use. Adoption is higher at the moment, and I say, generally a lot of the airlines are accepting virtual cards, and a lot of travel agents are looking to expand their virtual card programs in the next few, in the next year or so to make sure they're utilizing kind of the virtual card products. So another misconception is card payments are slower to settle with acquirers. That was probably generally true at the beginning of the COVID crisis, where I think a lot of acquirers were holding back funds they were paying to airlines. But we've definitely seen that, and we've talked to a lot of acquirers, that has changed now, and they actually are paying suppliers a lot quicker. So, and then the fourth misconception is the payment choice won't help from a manual perspective. And obviously, one of the key drivers, as Kevin said, is that virtual cards, if you implement a virtual card program, really what you need to do is you need to automate your processes, and virtual cards really help in automating your processes. We have lots of reports that you can use. The transactions themselves are in real time, and there's a lot of information that goes with a virtual card. So really from an automation perspective, virtual cards are key to you automating the process kind of over the next year or so. And the key finding four, a lot of companies are starting, obviously with COVID, to really rethink their kind of strategy on payments and make sure that they have the IT infrastructure in place and the optimization and the efficiencies that they need to be able to process supplier payments. And really virtual cards and working with companies like Amadeus, gives you that kind of that automated solution to be able to really future-proof your payment infrastructure. So those are kind of some key findings from, and as I say, there's a lot more in the report which you can get from the internet, so from our website. So let me go into a little bit more about who Amadeus Payments is. So just to put into context of what we do. So there are really two sides to our business. We have a very strong merchant division, which is processing payments for companies. We're a kind of gateway to lots of different payment providers, and we process actually over kind of 100 billion in payments processed this year. So that's one side of business, and the business I'm in, which is the payer side, is about paying suppliers. So we have a B2B wallet, it's called, which is a system that allows you to access lots of payments options and allows you to pay your suppliers globally. So it's core to the way the business works. And what we offer in kind of the payer part of the business is really choice. So I think where we differ from a lot of the providers out there that offer virtual card programs is we have a gateway into lots of different virtual card providers. So we don't have a one-size-fits-all product. We have a very varied product set. So we offer B2B wallet in 187 countries and 42 locally issued kind of payment options. So we have the choice, if you're paying suppliers around the world, the choice to pay wherever you want and whoever you want in whatever currency you want, as long as it's a Mastercard supported currency, obviously. But that's key to it, is having choice, having reach, and being able to use the payment option where you need to use it. So the other one is where, again, I think we're quite unique, is around orchestration of the payment method. So what we do is, because we have access to a lot of data, we are able to suggest to you what is the best payment option you can use. And that could be a payment option to maximize your revenue. So part of the key USP for this product is that because you're using a virtual card, you actually get a rebate back on any payment you make as a travel agent. So we can look at the data and we can say, well, using this product, you can maximize your revenue, or actually you can reduce your costs as well. So because we have a wide range of products, the orchestration engine is able to maximize the best product that you're able to use for a particular payment. We also support bill-back services and hotel payments. We're available through, obviously, all the channels on Amadeus, the GDS, the online services and offline services, and through all the web services. We do connect to lots of different banks. At the moment, it's about 50 plus different banks as well. So we have some key banks that we work with, which gives us a very nice, allows us to do a very nice revenue share with all our customers that come and use our system. But also, if you said to us, actually, we're working with another bank, could we use them through your system? That is something we would support. And the advantage of then using us is you have one single connection into lots of different providers. So you're not having to future-proof everything. We will future-proof the system for you. And then the sixth one is around merchant insights, which is we have obviously access as a GDS to lots of data points, and we're really building that out over the next kind of year or so to really offer people some very, very unique and some very robust merchant kind of insights and data points that allow them to really make payment decisions and what they do. So paving the road really to business recovery, what you need to think about in the next kind of 12 months and where these products really help you is really probably around these three areas. So one is you want to probably more cash. As the survey said, profitability is going to be key to travel agents in future, and using virtual cards gives you that extra kind of revenue stream. So we can help with that. We can suggest the right products, and we can help optimize that kind of revenue for you, because it will definitely add to your kind of bottom line. And also, you want to reduce the kind of cost of manual processes and reconciliation and things like that. So we just look at the first one. So really, the things you kind of need to look at is how much are B2B payments costing you currently, and what is the cost of that? And it's not just the cost of the payment; it's the cost of the manual processes around that. So where possible, you want to turn your payments into a revenue stream, into a profit center rather than a cost. So, and that is where virtual cards really can help you. And also, not just that, but it can also help you with avoiding other costs, things like surcharges and FX fees and transaction costs. You want to protect your revenue. So one of the key things that Kevin mentioned was really, and where Mastercard really helps us in designing these products, is around your chargeback rights and your fraud risk. So every time you use a virtual card, it's very similar to your consumer card. It gives you protection. So if an airline goes bust or your supplier goes bust, you will be able to get charged back on those transactions. And that obviously during the COVID period was very much a great kind of selling point for virtual cards. So yeah, you need to think about that when you're rolling out payment products, is what is your risk to the supplier you're paying? And really that's where virtual cards present a unique advantage over normal payment types. And then you need to reduce the cost of automation. So everything we do from a digital perspective. So all our services are accessible through APIs, through mid-office and back-office systems, through Amadeus systems. And they're geared towards automating the reconciliation process and actually giving you information on what is happening with a payment. The really big advantage of cards is throughout the payment cycle, you know where a card is. You can see it's been created, it's been authorized, it's been settled. You can see if there's refunds on it. You can see obviously chargeback rights and where you used insurance policies. So it really gives you more visibility on the payment cycle and where payments are. So another real advantage to using them. So those are kind of the three areas really that you need to kind of be looking at when you're kind of thinking about your payment strategy over definitely the next 12 months. And obviously from an Amadeus perspective, we'd love to kind of talk to you on your payment strategy and where you go and how we could help with that. But that's just probably I've got all the slides I've got for today, so we kind of went through those quite quickly. But that's the end of our presentation. Thank you very much. Kevin, do you want to?
Thanks, Nick.
Okay. Yeah.
Thanks, Nick. So that concludes our session today. Nick and I will be at the Mastercard stand just outside the area here. So if you have any questions or want to come and talk to us about any of the things that we've talked about today, please do come and see us. Thank you very much.